Yo, what's up, everybody? Yeah. I hope you are doing well today. This is Money Mondays. Money Mondays, baby. I already dropped my first video of the day, which is car talk. I hope you've checked that out. That was a short 10-minute or so clip on fitness, where I take your fitness to the next level. But many of you have requested financial and business related information. I wanted to make Mondays at least one of the days that I do this for you. And I will start very simply with the conversation because my own investing strategy is rather simple. Now, some of you might be saying, Mike Dolce, 4-time World Trainer of the Year, cover of Men's Fitness, Sports Illustrated's most sought after coach in professional sports. Why is Dolce talking about fitness or business or finance or business? You might not know that I am also a real estate investor. I was a certified municipal tax assessor, working in that trade while also running my strength coach business because I love numbers. I love money. I'm a math guy, studied and have multiple certifications in income valuation and different levels of mathematics. I love real estate too. And I've been a heavy real estate investor for quite a long period of time, buying, selling, holding, flipping, renting, Airbnb, and many other aspects of the real estate trade, to which I absolutely love. I'm also extremely well diversified in the stock market with multiple accounts within my portfolio, my overall portfolio. And this is an area that I have focused on very strategically for the last 20 some odd years. I talk at length in my Dolce Diet certification and nutrition conference courses how our coaches can be self-employed entrepreneurs running their cash flow positive businesses and being completely debt-free and financially free. I also proudly boast a 0 credit score, which means I don't even rank inside the FICO world. How is that even possible, Dolce? That means I've never taken out a loan, a mortgage, a car lease. I have 0 debt. I have 0 creditors. And I've done this. I've lived like this for 15 years now, 18 years now. I think 18 years, actually, since my mid-20s or so, where I completely walked away from everything because I found a different way. And this is a quick little preamble before I get into how you can make some real money. Also, like this channel, bang, 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 bang. Throw a thumbs up. I appreciate that. It lets me know you're there and it lets me know you care. So I've been living completely debt-free for the majority of my adult life at this point. I have a 0 credit score, and so does my wife. We own multiple properties, primary residences, income producing properties, commercial properties. We own multiple vehicles, to which you've seen in my car talks. Never have we used debt or loans or mortgages or leases to purchase any of these. I am a man who grew up in extreme poverty, and that's the truth. My childhood home was foreclosed on, knocked down, and turned into a parking lot, leaving me homeless for a period of time. While we were living there, we had no heat, no electricity, no running water, and we were lucky on the days that we have food. I don't say this because I want a sob story. I say this because I learned the hard way how to figure out money, so I could be financially free, so I could ensure my roof. There was always a roof over my head. There was always heat in my house. There was always lights on when I flipped the switch, and there was always food on the table. It became a bit of an obsession for me, which is probably why I love real estate so much. Think about the trauma of your childhood home getting taken away from you, foreclosed on, and turned into a parking lot. I remember very vividly picking through the rubble after the bulldozers had come to knock down the house, looking for small little personal items that might have been left that couldn't be found because we were kicked out in such a short period of time. It was challenging to get a lifetime worth of small little trinkets out of the home. But again, I figured out money, and I figured out money in a manner that most people don't have access to or the motivation to. I had to learn and I had to figure it out at a very young age. Now, I'll talk about real estate in a different video, but this video, I wanted to speak more importantly about the stock market. And when we think about the stock market, we hear what's on TV, we watch, CNBC or CNN or Fox News or MSNBC or ABC and whatever else, whatever channels that you might listen to and whatever resources that you might read. And a lot of it is simple hyperbole. A lot of it is just clickbait, simply put there for you to engage with, because that's how the algorithms are built. When you are investing in the stock market, you need to determine what is your purpose for investing. Now, I am not a professional. I am not a money manager. I am not a stockbroker. I have zero, as a Greg Doucette homage. I have nothing. I have no license in this at all. So this is just one dude telling you what I do, what I found successful. And I'm going to tell you, don't do anything that I say. Anything that I say is completely wrong. So simply don't do it. But it works extremely, extremely, extremely well for me. Now, I know a lot of people in those industries, and there's lots of the day traders and lots of the penny stock traders and lots of those who try and short the market and play all these different gobbledygook games with the stock market and with their money. What I wanted to point you to is what I've found to be most successful, and that is investing in mutual funds. And inside of mutual funds, we want to focus more on index funds. Index funds are funds with which invest in a wide variety of companies in very specific sectors. My personal favorite is VOO. That is the ticker symbol VOO, which is the Vanguard S&P 500 index fund. Now, this index fund is one of the most successful funds of all time, and it has one of the lowest expense ratios of any fund, any stock that you can ever invest in. This makes VOO much more profitable for nearly any person who's ever invested in it with regards to other similar types of investments. Again, don't do what I tell you. This is just what I've found to be extremely successful. Now, some people, they want to buy Tesla, they want to buy Amazon, they want to buy Alibaba, they want to buy Nike, they want to buy Netflix, they want to buy Disney, they want to buy Microsoft, they want to buy all these publicly traded companies. And hey, that's fine if you don't mind losing your money. If you don't mind losing money, sure, go ahead and invest in individual stocks where the volatility is massive. Elon Musk goes on the Joe Rogan Experience podcast, smokes a blunt, and his stock price drops 30%. Could you imagine that? 30% from smoking a joint? Are you crazy? But this stuff happens. You get a bad quarterly earnings report that comes out. You get a CEO that has some, nefarious or questionable public activity. The stock price crumbles, and with that, so does your portfolio. That is not a conservative bet for me. I'm rather conservative in my investing, and by conservative, I mean I look to protect my principal. I protect my principal, and I'm looking for steady growth. When we talk about steady growth, again, I point back to VOO, Vanguard's S&P 500 index fund. The S&P 500 has had a historical 9+% rate of return year after year since inception. Approximately. Now, these numbers we can argue. You can get the white coats on here to argue little points here or there. But generally speaking, and I do have a graph here that I will discuss with you, over the last 30 years, 29 years, since 1990, the S&P 500 has only been down 8 times. 1, 2, 3, 4, 5, 6, 7, 8. Has only been down 8 times in the last 29 years, which means it has been up 21 of 29 times. Currently in 2019, it's up 19.97%. Last year, it was down 6.24%. But in 2017, it was up 19.42%. And 2016, it was up 9.54%. In 2015, it was down 0.73%, which is almost a wash. But the year before that, 2014, up 11.39. 2013, it was 29.6. 2012, 13.41. What we can say is the S&P 500 continues to climb, and it continues to produce conservative returns that beat nearly any other investment vehicle known to man. Now, we can talk about real estate investing, which I will do, and that's a whole nother trade. And I do suggest people consider investing in real estate, but there's a formula to do that. And I'll talk about that into a different video. I love real estate, and I actually beat my mutual fund and index fund and stock market returns with real estate because you get the appreciation plus you get the cash flow, which is a beautiful thing. But also, you have to know what you're doing. You need to know how to buy real estate and when to buy real estate. Also, I suggest purchasing real estate for cash, and I can teach you how to do that. I don't charge you to do it. I'm just here talking on my microphone. I can teach you how to do that stuff too, or I can teach you how I did it. Remember, don't listen to me. Don't listen to anything I've said. Now, I am throwing a link up right now into the live chat. This is simply for Robinhood. Robinhood is one of the vehicles I use to invest. I actually use Robinhood to personally purchase shares of the S&P 500 index fund, ticker symbol VOO, which is held by Vanguard. I also have Vanguard accounts. I have accounts directly through Vanguard in which I have multiple other funds, index funds, and mutual funds that I do invest in. I'll talk about that in a later video. If you click on this Robinhood link, you will act and you decide to sign. If you choose to decide to sign up, do your own research, you'll actually get a free stock with this purchase. I will get a free stock also in full disclosure if you care to do this. Now, some of you have done this before. I mentioned Robinhood a while back on a different video, and some of you came through and purchased it and you got a free stock, and I got a cool free stock too, which is awesome. Robinhood has been excellent. Robinhood is fun. I really enjoy it, but you need to know what you're doing. So don't do anything without doing your full due diligence. But I do use Robinhood. It's extremely easy to do. It's one of the more prestigious stock trading apps. And what I like about Robinhood is there is zero commissions, there's zero fees. It costs me $0 to buy and sell my stocks or funds on Robinhood. Most of the other apps out there, most of the other providers out there, there is a transaction fee. Usually it's like $2.99 to $14.99 to simply buy or sell an individual stock, which is why I like Robinhood. And Robinhood for me is fun. I got a couple dollars in Robinhood, and I like to buy some stocks as they come and go. I've bought Tesla very low. I bought Tesla after they crashed. I do drip money into VOO, into into the Vanguard S&P fund. I bought some Disney when Disney was down. Thankfully, I did that because look at how well Disney's done recently. I bought shares of inside of gold, some index fund in gold prior to the recession talk. All worked out rather well for me. But again, my Robinhood account is more my fun account. My long-term investing account is in different dashboards, as I'll call them right now, and I'll explain that in a deeper video. So when I say beat the market, how to hack the market, we don't hack the market by buying individual stocks. I don't suggest that. I don't do that. I don't agree with that. If I ever do that, that's more like I'm just rolling the dice in Vegas. I think I know what I'm doing. I have some fun doing it, and it's enjoyable to do. It's enjoyable to do, but single stocks don't. My personal preference long-term is index funds, and it's index funds that mimic the S&P 500. And I want you all to do your own research on this. The S&P 500. Now, if you are dollar cost averaging, which means you are purchasing the same relative amount of shares inside this fund at even intervals, let's say it's every 2 weeks, once every payday. Let's say every payday you buy one share. I think shares are right around 260 some odd dollars. So every payday or every other payday or one payday a month, once a month, you buy one share of the S&P. Bang, 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 bang. And now you guys are like bang, bang, bang. You're all giving this video a thumbs up because it's like Pavlov's dog. Bang, bang, thumbs up, thumbs up. Anyway, I'm joking. So you just bought 12 shares this year. You bought 12 shares next year, 12 shares the year after, 12 shares the year before, 12 shares the year before that. You keep buying it as it's going up and it's going down. So then there is a dollar cost average. There is an average price per share of your entire holdings. Year after year after year, historically speaking, that is going up at approximately 9+%, with all the bad, all the good written into that. That is a major return on your money. And as I'm talking to you right now, before I sign off on this, let me see if I can open up this investment calculator. Now I'm just curious. So let's say today, and let's say 30 years from now, right? Let's say in 30 years from now, and let's say 30 years, and let's say it's $100 per month. Let's say it's just $100. Now let's do the actually, let me do this right now because I want to be fair. We're talking about VOO right now is trading at $2.75. All right, so let's just say $2.75. So $2.75, stick with me, times 12 is $3,300 per year, but it's $275. So I'm going to put $275 a month. Right now, let's say I have zero. And you're going to start right now. So $0 right now, $275 per month that you're going to be putting in. And let's say that you're just doing it at a 9% interest rate. What does that turn out to be? That turns out to be $490,000 in 30 years. That is $99,000 of contributions and $391,000 of growth just by simply dollar cost averaging. And that's just buying one $275 purchase per month over the next 30 some odd years. Dollar cost averaging, set it and forget it. Now, if you wanted to double that to $550 per month, what does that turn out to be? Yikes, $980,000 per year sitting there waiting for you with just a little over $100 per week that you're dripping into a fund like VOO. Now, this may or may not be something that you're interested in, but it's something I've found to be rather efficient. And it's something that you might want to consider learning more about. Remember, don't do anything that I said here, but you should click on that link to see if Robinhood is something that does fit for you. And I'll also put it below this video once this video posts. Now, let me briefly answer some of your questions before I go. Enrique, hell yeah. What's up, Enrique? Brandon, yes, Brandon. Zach, F-U Dolce, F-U Zach Mohamed. Second best content after the talk with Phil Duru. I appreciate that. Jesse Lee. Bang Muay Thai athlete and MMA fighter. Just wondering what I should be looking for in my blood work and if there is a name of a specific blood test I should be looking for. Thanks for all the help, Coach. I'm actually going to be doing a blood work video that we're working on right now at the end of the week. So Jesse Lee, if you could hang out a little longer, just a little longer, hang out till Friday, and I will have a very in-depth answer for you. Mehmed, make this kind of video more, Coach. Thank you so much. I absolutely will. I enjoy this stuff. This is just a very brief intro. I'm about to run out to the gym right now. Brandon, my girlfriend and I are taking your advice. One thing is getting rid of one of our cars that got 3 years left to pay off the other car and just save a few grand to buy a second one after winter. Brandon, I am so proud of you. That is absolutely amazing. That's exactly what I do. That's exactly what we did. Because back in those days, I did have a leased vehicle, got rid of the leased vehicle, paid it out, got rid of it, bought a $1,200 1992 Buick Regal that I drove for 7 years, about 7 or so years. My wife drove a 2005 Kia Spectra with roll down windows and manual locks. How about that? We rock that. Paul, some natural granola and yogurt before bed. I love it. Sounds good. Dingy. I own 2 houses at 28. One was given to me. The other I just bought and plan to get renters in to pay the mortgage. Where do I go from here? You want to, well, my suggestion, not knowing anything else, do you have any other debt in your life? Do you have any consumer debt? Do you have any school debt? Whatever other debt you have, Dingy, you need to get rid of that debt immediately. You need to work your ass off and have zero debt. You need to not owe a single soul anything. Then you need to aggressively attack the mortgage on that rental house. Aggressively. get as many renters in there as you need and get that paid off. Then you're sitting there completely cash flow positive. You have your primary residence, which is paid off. Me personally, I'm determining what the mortgage is on that home, and I am paying what I'm supposed to pay in mortgage into another high interest yielding account, which could be something like Wealthfront or Capital One 360 or Ally Bank or Kearney Bank, where you can get upwards of 2 to 3% annual interest in similar type of high yield checking, savings, or money market accounts. The one that I just said work really well. Longer term investing, I would personally throw that money into an index fund like a VOO, an S&P 500 index fund with a very low turnover. That works really well for longer term holding of cash, maybe 5 or so more years. But Paul, what I'm doing if I'm you is I'm getting rid of as much debt, all that debt, as soon as possible. I'm going to be an absolute madman, like I was a madman, to pay off that early debt, that late teen, early 20 adult debt that I had, that I thought I needed and was supposed to have, as I was trying to establish my own credit score, only to realize in order to have a perfect credit score, you need to be at least $100,000 in debt. Did you know that? You need to go in debt at least $100,000 in order to have a perfect credit score, which allows you then to borrow more money. It made more sense to me to have $100,000 saved than to spend $100,000 and create debt. So I determined to have a zero credit score, but to have a bigger pile of assets behind me. Now, most of my assets are in dirt. What does that mean? When anytime I get any money, any additional money, I buy a piece of property with it. Immediately, I buy properties. My big thing right now is buying retirement properties, retirement homes, not like a retirement building, but buying age-restricted homes, which is a great market for people, and making these beautiful properties for 55-year-olds and older, renting it out to them because they can't quite buy it, but they're more than capable of paying the rent. And we take care of everything for them. So it's a beautiful, happy existence, and it's all just good karma. Great investments for us in certain parts of the country. That's a whole nother conversation. And you can pick these up at relatively low values because it's a niche property. They're a little harder to turn over, but at the same time, if you can buy them with equity on the deal. And this is the thing I'll talk about in a different video, how to buy them at 10 to 20% below. Now, I'm not going to buy a piece of property unless it's 20% below retail. It makes no sense. I'm also going to do a video on how I bought my Jeep, my newest purchase, how I was able to buy my Jeep at 30% below MSRP for a brand new off-the-line Jeep Sahara Unlimited JL V6 4-liter with the 8-speed automatic transmission, full leather package, full digital package, upgraded screen. How was I able to walk out of the dealership 30% below MSRP? I'm going to do a video on that too, which is pretty damn gangster. But when you put these deals out, I'm speaking to you, when you purchase properties, you need to purchase a property so you're already in the black. You need to purchase a property so you already have equity. That way you're protected. If you do need to get out, you can get out and still have cash in your hand and still get paid for your time. Otherwise, it's not worth the deal, in my opinion. Now, you get a lot of people out there that they're talking about, buying on credit. And they're talking about just overextending themselves with debt, and that the Burr philosophy, which is to buy it, rehab it, rent it, refinance it. That's just ridiculous. That makes no sense to me. And then they take that money and they flip it and they buy something new and they continue to extend their debt and their liability. Liability is not a good thing, in my opinion. Hardware says, I read setting aside 15 to 20% away for guilt-free spending. What do you spend yours on, Dolce? Nothing. Guilt-free. I buy $2 coffees. That's my guilt. $2 coffee. There we go. I'm done. Done deal, baby. $2 coffee. I'm good to go. That doesn't do. Experiences. That's my thing. I don't care about goods. I mean, come on. How many times you see me wear the same hat and the same shirt, right? And these same shorts, if you could see them. I'm not going to stand up and flash my waggle in your face, but that doesn't do it for me. It doesn't do it for me. Experiences, on the other hand, traveling, yeah, that does it for me. Experiencing life with the people I care about. That's what matters. Chopper, I want to get rich with a blog. Well, you better get writing and you better have something to say. Salvatore, weird. My notifications didn't come up saying you're live. YouTube, step it up. Zach C, what's up, my friend? Oh, Zach C with the $2 super chat donation. Boom. Zach C stepping up. Would you invest the $500,000 purse for the Ziggy fight? Absolutely. I would take that $500,000. And like I said, I would put half of that. I would donate $250,000 to a childhood related charity. And the other $250,000, I would go and buy property for cash right out of the gate. I would buy property for cash. Anywhere between probably like $100,000 to $250,000 property. I'd look for a multi-unit property if possible. I'd look for like a duplex or something. Maybe I could get a duplex probably within 45 minutes of where I'm sitting right now for about 250, 300 or so thousand. That's what I would do. Or I would pick up a couple condos for maybe 100, 150 or so, somewhere in that range. And I'd put long-term renters in there. Easy deal, done deal. I try and find some with an HOA that allows an Airbnb. So at least I had that option. Not that I would definitely do it, but I would want that option. And living down in the shore, you need to make sure that you find an HOA that allows at least 2 leases per year. Why is that? That means you can do a summer, winter rental. This is another thing that I'll talk about. You need at least 2 leases per year. A lot of HOAs, they only allow 1 lease, 1 tenant per year. You need to have at least 2 different leases per year because you want to be able to do a summer winter rental. And the summer rates, depending on where you are, you can bump up the price. You can charge, 2x, 3x, 10x, depending. In where I'm sitting right now in Belmar, New Jersey, you can rent a property for 20 grand for the summer. That'll go for maybe $1,200 to $1,800 monthly. So it'll go for maybe, $3,000 to $5,000 per week in the summer. It'll go for maybe $1,500 per month in the winter. Crazy. So you want to be able to have that option. Tommy Adams, F you, Dolce. I am a state employee. Should I participate in the 457B deferred compensation program? I would, depending on what they offer you. Now, what do they offer you in the 457B? Do they give you any sort of incentives to do that? And what are your investment options? I used to be a state employee, actually, and I did have a deferred compensation program that I did invest into, and I was able to roll that over into one of my current retirement platforms. After I left that field, because I walked away because I said I was a municipal tax assessor for quite a period of time. Ryan, been using Robinhood for months. Options on Bitcoin and long holds plus my work 401k. Ryan, that is awesome. Your 401k. Are you in a Roth or are you in a traditional? I would always suggest you be in a Roth 401k, or don't listen to what I say. Remember, I prefer to be in a Roth 401k. Declan, thanks, coach. I would also love more of these videos. Appreciate you, big dog. Declan, I appreciate. I'm happy to help. Zach C says, F, BJ, Francis, Ziggy, Keto, and DeLauer. Zach C is our in-house super chat gangster. OG, just coming in and crushing the content, always having fun. You always make me smile, my friend. Always make me laugh. I really enjoy you being here. And it's funny how aligned we are in so many things, though I don't publicly shout out or call out or have mean things to say. But I do definitely have a kinship to you in many ways. So I think that's it. We're almost at 30 minutes. This is pretty much no more questions coming through. I appreciate it. When the F are you going to make a Dolce banner? A Dolce banner for what? Back, tell me, I'm sorry. A Dolce banner. What do you need? I think we can get it done. Guys and gals, I appreciate you being here. Subscribe to this channel if you haven't. Click on the notifications to make sure you get notified when YouTube decides to notify you. And also, bang, bang, bang. Thumbs up, please. Thumbs up if you appreciate this content and how hard we are working for you guys here. This is 2 videos today. My goal is to put 7, 8, 9, 10 videos out this week. 10 videos over the next 7 days. Can I do it? I will do my best to do it, but I want these videos to be of value. I want them to be actionable and evidence-based and honest, as they always will be. Leave comments below and let me know what you want to see, what you want me to talk about, whether it's this money, finance, business stuff, or more on the health, fitness, sports performance, longevity, and lifestyle side. We can talk about it all here, and we will talk about it all here. Zach, when the F are you going to make a Dolce banner for a garage gym? Zach C, I think I can get that done for you, my friend. If you are on Instagram, shoot me a DM on Instagram, brother. I can definitely show you the way. Soul Piper, I've been getting leg pain for squats recently, and I'm not lifting a ton in the weight. Is that a form issue? Ways to remedy it? So Piper, it's hard. It's tough to say I don't know without evaluating you. I always tell our clients, go to your doctor, get a medical diagnosis. Let's make sure you're healthy. Let's make sure there isn't something else going on here. With a clear diagnosis, then I would suggest you work with a hands-on practitioner who can evaluate you. Now, let's say you get your doctor's diagnosis, your doctor clears you to completely train you with no restrictions. You might want to work with us where you can work with us directly. And what I will have you do is I will have you just set up your iPhone or your Android or whatever your phone is, or a video. I don't care really. And send us a video of your sets. I want to see your top end sets. I want to see how the bar moves, what your body looks like, what type of impingements or imbalances or maybe perfect form that you might have. From there, my team and I, we can work with you to start building your specific program. We do offer that service. We don't promote it, but those of us who contact us privately, we do that. I would strongly suggest you DM me on Instagram to get in touch. You can always email support@thedolcediet.com, but you can always just DM me on Instagram. I'm very responsive there. Also, that's at The Dolce Diet, of course. The Scotty, F you, Scotty. Soul Piper, awesome, man. Thanks for doing these Q&A sessions. I'm always happy to do it. Guys and gals, I really appreciate you guys being here. I hope you like this video. And I'll be back next time with more content. Until then, boom.